Hello and good morning, everyone. Thank you for joining this week's episode of ATRAM's webinar series. I'm Bea Asis, Wealth Management Associate and your host for today. This morning, we will be having an interesting introduction on corporate bond investing and the ATRAM Corporate Bond Fund, which has proven to be a strong performing fund in these exceptionally uncertain times. Before anything else, I'd like to let you know that this webinar will be recorded and that copies will be disseminated within the day as well as posted on all our social media platforms. We have a Q&A portion at the tail end of this webinar. We'd love to get your questions. You may ask them by clicking on the button below your screens. The economic downturn of the last few months has definitely highlighted the value of having a diversified portfolio with downside protection. And an integral part of this overall portfolio is a strong fixed income segment with high quality holdings. In particular, we have seen that ATRAM's corporate bond fund has amazingly weathered this disruptive force we know to be COVID-19. Joining us today to talk more about this fund and corporate bonds in general is ATRAM's very own fixed income portfolio manager. As for the most recent, in his impressively long list of awards and distinctions, he was awarded the #2 rank as most astute investor in Asian local currency bonds by the Asset Magazine in 2020. Please join me in welcoming this CFA charter holder, Certified Financial Risk Manager, and Certified Public Accountant, Mr. Lodevico Ulpo. Hi, Devi. It's so good to see you today.
Hey, Bea. Good morning, and thank you for the introduction. Good morning, everyone. I hope everyone is safe in your homes, and those few who have tried to go to your respective works and offices, please be safe and follow the health protocols. And glad that you guys have spared some time for this webinar.
So, Devi, what have you been up to during this exceptionally long lockdown we have here in the Philippines? Have you developed any new hobbies?
Oh, yeah. Good and interesting question. No? So, during the lockdown, I think became interested with plants, gardening, and nature in general.
Wow, so are you what they call a plantito now? I've really been intrigued about plants too, actually. I have quite a few friends who have taken on the hobby as well. And I'm really amazed at the attachment people form with their plant babies. Sadly, for me, the only quarantine hobby I've developed is more eating and cooking. I can't even tell you how many cinnamon rolls I've baked over the last few months. But enough about quarantine hobbies. Let's go straight to today's topic. Can you please tell us the basics of corporate bonds?
Right. So yeah, I still actually would want to talk about planting in general because I think that specific hobby is very connected, no, to what we want to discuss this morning. Next slide, please. So actually, when I was doing my gardening, I happened to relate one of the portfolio strategies I've been managing for the firm. No? So these are called the corporate bonds. For those who are not aware, no, so corporate bonds are borrowings of corporations to help them finance their operations efficiently and to take on the business opportunities. No? So I think in its simplest form, corporate bonds or bonds in general are interest-bearing investments. No? So when you buy this particular investment, you earn interest. No? I think similar with plants, you plant a seed, the seed grows into a small plant. And as you monitor the developments, and you'll be excited about this, you start to see it bears fruits and maybe vegetables for you. I think you will see on the left side chart, you see the plant growing. Similar with if you buy a single corporate bond, it grows over time, no, as a source for capital appreciation, as a source for interest income, and the good thing with it is it's growing even on weekdays and holidays. So it's not choosing any environment. I mean, of course, with the weather suitable, no. On the other hand, on the right side, no, we actually want to associate corporate bonds or corporate bond fund as a garden, no. So I mean, you can relate both. In that corporate bond fund or a garden contains different types of plants and varieties. So in making a garden, you carefully pick different kind of plants and trees to your own specification, and then you study them, you water and then monitor and care for each single plant every day, no? And I think having more plants, you are more likely to be generally okay in a wider variety of conditions, and you are actually happier looking at all your plants in your garden than spending all your money in one plant. I think it's still generally fine, no, to have a garden. This is very similar to how we manage corporate bonds. So we like diversification, we like variety, because many corporate bonds in a fund is a lot more efficient and stronger than in just owning a single corporate bond or a plant for your garden.
That's a really interesting way to look at corporate bonds, Devi. I think I somehow have the same attitude towards plants with how most people view investing, in that as a person who's new to these sort of things, I'm quite overwhelmed by it. Choosing the right plant is a lot like choosing the right investment, wouldn't you agree? I mean, there's a lot of factors to consider, like how much care does a plant need? And you always have to ask yourself, will this particular plant thrive in the current environment I'm in?
Sure. Okay. Before we get to plants, no, let me just give a quick summary of what have happened over the past months, and I think many of you here are quite familiar with the events. No, so COVID-19 brought a very strong storm in our country, so a very strong typhoon to keep everyone inside our homes. So ironically, so locking inside your houses have a very bad effect. No, so actually sa mga negosyo, sa mga kabuhayan na kinakailangan lumabas ng bahay. For example, yung mga transportation sector, yung mga informal business community, like yung mga palengke na mga nagtitinda ng prutas sa tabi ng kalye, or yung pagpunta mismo sa malls, siguro lahat tayo nakakamiss niyan, no? And other than malls, siguro yung namimiss din natin pumunta sa mga tiangge. So, yung lockdown have caused significant negative effects na actually dumiretso sa pagbutas, no, ng bulsa ng ating mga kababayan. And I think if you look at the news, you can categorize what happened like as an economic recession. So overall, paghihirap na nating lahat, no. I think if you sum it up, I think we can all agree to one word, which is uncertainty, no. I think if there's a big typhoon, no, you don't know what's going to happen next. I think many of you have asked, no, ano bang ginagawa ng gobyerno natin? No? So there are three actually measures that the government did over the past few months. No? Three measures: the health measures, economic policies, and business assistance. So kaya yung naririnig nyo sa mga balita, tinawag yan na bayanihan law para masakop or lahat ng aspeto na kailangan may gawin ng gobyerno natin, no, sa health, economy at sa mga negosyo. So, I think itong mga policies na to ay familiar sa ating lahat. Community quarantine, for example, this is a health measure, no? On top of the widespread testing, contact tracing, saka yung improvement ng mga testing facilities. Yung mga economic policies naman, it's meant to actually improve, no, the economic conditions para yung mga negosyo are able to borrow at low interest rate and actually paririnig nyo na nagdagdag ng pera yung BSP sa system to help the businesses. And then on the government side, I think lahat tayo very familiar with the SAP, no? I mean, it's once in a blue moon na the government will actually hand you money, right? So these social amelioration programs or fiscal measures help actually to fill in yung mga or fill the gaps dun sa mga butas ng bulsa na na-create ng pandemic na ito, no? Tapos yung mga business measures naman, ito yung mga business assistance, no? I think if you look at your email sa mga dyaryo, may tinatawag tayo na loan moratorium, no? Hindi mo kailangan bayaran yung credit card mo for quite some time. I think may mga tulong yung gobyerno doon. And not just the credit cards, also for the small and medium enterprises, businesses, no, yung may mga loan moratorium sila sa debt payment. And on the employment side naman, yung mga kababayan natin na mga OFW na umuuwi, yung TESDA actually nag-o-offer sila ng basic training, no, para makasurvive tayong lahat sa pandemic na ito and sa economic recession.
So Debbie, I totally agree with what you said, no? This whole COVID situation is really a lot like a storm. And hindi lang normal storm, kundi parang signal number 5 storm siya, di ba? You know, the fact na 6 months na tayo nasa bahay lang.
Yep.
Ang klase.
Yep. So this slide naman, I think I mean relating to your point, no. Signal number 5, no. I think nagsimula yung signal number 5 from March to May, no. So itong slide na to, it gives you an idea, no, about the weather, but we will convert this into economic weathers, no. For example, yung first part sa my left-hand side, ito yung naranasan natin from March until May, no. Yung ECQ. So ayan yung sinasabi ni Bea na signal number 5. So ano ba nangyari nun? Nagkaroon ng lockdown, ECQ, bawal lumabas, may curfew. Diyan tayo nakaranas ng economic recession, yung pagbutas ng bulsa ng mga kababayan natin dahil walang kabuhayan. Apart from that, marami din yung nawalan ng trabaho, no? Widespread unemployment, and because nagsama-sama ng lahat yan, naka-apekto sa mga negosyo. So wala nang kinikita yung mga negosyo kasi sarado eh. Makikita niyo yan pag sa mga nag-visit kayo ng malls, maraming nagsara, no? If we are in this type of economic storm, no, or signal number 5, we need the government's help, and the economy is very desperate, no, for support from our government. So ang ginawa ng gobyerno is what I've discussed earlier, yung health, economic, and business measures, no. So what they did was to help everyone in the form of what they can do and what they can pass through the laws, no. So in this type of economic environment, you would wonder, ano ba yung dapat investment ko, no? Tie that up, no? Kasi makikita nyo naman kung anong nangyari sa stock market nung time na yun, no? I think hanggang ngayon, minus 25%. Nakakatakot, no? Pero nung time na yun, yung mga investment na nag-perform, no, very strongly are government bonds, no? You can liken the government bonds as like big trees with big trunks, no? Kasi kapag kahit gaano kalakas signal number 4 or number 5, yung mga pinakamalalakas na puno, yun yung mga trees na mahirap patanggal, no? Kasi very strong roots, very strong foundations, no? Pero you can ask now, no, where are we in the economic environment? Meron pa bang signal number 5? Actually, I tend to argue, no, kasi at the moment we are seeing some bits of sunshine, pero may ulan pa rin. So ano yung environment ngayon, no? What we are seeing from the ground and from our research is that the economic recovery is starting to flow, no? Nagsisimula na yan. Nagsisimula na rin magbukas yung mga negosyo kasi Dati ECQ, ngayon GCQ na. And I think by the end of the month, mukhang mas malilift na and mas magiging madali na yung mobility, no? And once we see that happen, magkakaroon ng improvement sa employment. And because of that, magkakaroon ng improvements sa earnings, sa pagkita ng mga negosyo. And because of that, the government will assess, teka lang, kailangan pa ba nating mag-support? Of course they do, no? They've been saying na we will pass laws, we will keep conditions accommodative, which means na ito yung fertilizer sa lupa. Hindi yan tatanggalin ng government for quite some time para makarecover yung economy. And right now, we are still seeing rains, but we are also seeing sunshine. No? So in that type of environment, if you think about it in terms of planting, that's the best, right? You have fertilizer, you have rain, and you have sunshine. It's perfect for gardening. No? And we think that in this economic environment, it's perfect for corporate funds, just like the garden. No? Of course, we are a long way to go for the super sunshine economy, but we will get there. We are hopeful. And then once you see those signs, I think the stock market can do the job for you. But at the moment, you have to step back, think about the economic environment. The economic environment tells you there's rain, there's sunshine, and there's fertilizer by the government, which is perfect for corporate bonds.
That's a very interesting weather forecast, Devi. Now that you've talked about when to invest in corporate bonds, maybe we can talk about the who. Who are the investors of this fund?
Okay, all right. No? So, thank you, Bea. So, ito yung main purpose ng ATRAM Corporate Bond Fund. No? Given that the environment is very ideal for this asset class, this is very perfect, no, for investors who want to maximize yield dahil yung interest rate environment right now is very low. So gusto mo mas mataas yung interest na makukuha mo. But at the same time, you want protection, no? And that diversification gives you that, the variety, no? Just like in our garden example. And corporate bond fund gives you the opportunity to take part in the Philippine economic rebound story, no? Without taking as much risk and price volatility from the equity market. No? So I think this is very good from the short, medium term to long term. Given the environment na may rain na, meron pang sunshine, and there's a good amount of policy support from our government. And overall, I think that will improve your investment returns.
So since you are the portfolio manager, Devi, I'm sure there are a lot of people wondering and they want to know what plants are you planting in your so-called fund garden and how do you choose the companies you invest in?
Sure, no. So this is how the garden, so this is the investment garden, so to speak, no, for corporate bond fund. No? So our garden is composed of established institution that I think most of you are very familiar with. No? So just look at your, I think how to look at it is just look at your monthly expenses or daily expenses. You spend on food, electricity, and now you spend so much on your internet, right? So when you go to eventually when you go to the malls, you go out and then you go to the road and then for expressways, you pay your toll, no? And when you get your paycheck and when you get a loan, I think the banks will earn from that, no? So all of those companies earn from your daily and monthly expenses. And these are companies you're very familiar with. So it's not just this year, no? If you look back long time ago, these companies have been around, no? So these companies over time have become stronger and more established and making the quality of the assets that they have in the balance sheet and the general credit profile very strong and solid. So if you buy the corporate bond fund, the opportunity here is that your expenses daily, no, daily expenses sa internet, sa kuryente, sa toll, sa mall, sa pagkain, sa banking, you will be able to convert that into income, no? Because eventually when you have the exposure to the fund, these companies owe the fund and they pay interest to the fund. And those interests will soon become part of your investment earnings. No? So, next slide. So this is how we select our plants in the garden. No? We employ this rigorous investment process to select the right investment given our analysis of credit risk. No? So if you compare the two plant, it's like you spend so much research for doing on your plant. And then you go to the garden when you're actually buying the plant, you spend hours looking at the plant. If there are some sorts of defect, no? And then once you buy it, you bring it to your home, you still look at it every day, you monitor, no? So similar with how we manage our investments for corporate bond fund, we do that similar process. No? We study, we analyze the financial performance, we forecast financials, and then we do our credit ratios, we score the company, we do security and credit scenario analysis, and many more form of quantitative and qualitative evaluation. I think that ensures that the bond fund will be able to give you that stability and income that you expect as investors.
So it's really about these strong companies and established companies. They have a good track record and they have good roots on them, so to speak, so that when you do invest your money, you're confident that you'll be able to reap the benefits pretty much.
Yes, so yeah, can you go to the next slide, please? So I think it's worth noting to actually have a relative comparison, no, of what this garden or corporate bond fund can do to you, as an investor. So at the moment, if you look at the corporate bond fund, you can since it's interest bearing, no, if you buy it, there's interest income. You can directly compare it to time deposit, government bonds, and corporate bonds, direct investments. No. However, there are significant differences if you compare it. The corporate bond fund gives you significantly higher yield compared to your time deposit. And if you look at this slide, I've picked an icon for this, no, for time deposits. It's a small plant, no. You're not getting anything from it. However, I think the yield of that is around 0.5% to 1%, and you have to tax that pa, no? If you compare naman the yield of the corporate bond fund against government bonds, the yield of government bond is quite lower. No, the reason for that is because it's stable and it's not bearing as much fruits as you see in this icon. It's like a mature, strong tree, but doesn't have the ability to bring more fruits. No, but if you compare that naman to direct corporate bonds, right now, the direct corporate bond issuances yield are around 3.5 to 4.5 to 4%. So the reason it's low is because the yield is pegged to the government securities. And the reason the corporate bond fund yield is high is because we were able to take advantage of higher yield back in 2018 and 2019. So we were able to buy some securities that provide significantly higher yield. No? Apart from that, I think you'll notice na okay, so it's a garden, no. Since it's big, maybe it's expensive to actually buy the fund. Actually, we argue not, no, because you don't need to necessarily buy the whole garden. You can just buy a piece of the garden, no. And I think the best part of this is that the minimum size to subscribe into the corporate bond fund is only 1,000 pesos, and you have an ownership of the garden, a part of the garden, rather than go for time deposit. Now you have higher yield, and then the minimum for that is around 10,000. And for government bonds and direct corporate bonds, I think the challenges there are, apart from the higher minimum size to buy, it's also the access. No, you can go to your respective bank branches and you can ask, and not every bank branch can tell you na what a government bond is and corporate bond is, and at the same time, do they have something to sell to you? No. So the idea here is to take advantage of accessibility this corporate bond fund can give you, and the higher yield and diversification it offers as a good investment garden comprised of many quality investments.
So that slide in particular is very informative, Devi. But I think there are also people wondering why should they invest in this corporate bond fund specifically? Why not invest in similar funds?
Thank you. So I think this slide summarizes everything. No? So actually, let's go back to the garden example. I really became closer to the nature over the past 6 months, and looking at how a garden looks like, it made me realize now really this is like the ATRAM corporate bond fund, no? Because if you build the garden, you actually build balance between income, growth, and principal protection. At saka yung pinaka gusto ko talaga sa lahat is because now, makakonvert ko na yung expenses ko sa income, no? Because these companies are companies that I can understand, I can relate with, and I am very comfortable to take on the risk because I'm paying them every day and every month naman, di ba? So I think just to summarize it all, the qualities of this bond fund is the diversification or the variety of quality investments it offers you. The second one is the yield maximization given the currently low interest rate environment. And then the third one, I think you can look at the chart, you can look at that steady line. Imagine that is your money, you know, it's steadily going up. And that's because we are doing the active management to make sure that it provides you with stable income and stable balance risks, no, and reward. So I think overall, I think no one can argue that it's even better to have an investment garden or a piece of the garden rather than to buy a time deposit or a single investment that gives you very small fruits or no fruit at all. Thank you very much.
All right. What a great presentation, Devi. Thanks for that. You've not only convinced me to put my money in this fund, but you've inspired me to start my own plant journey. After this call, I hope you can send me a list of plants you'd recommend and your gardening tips. But going back to today's session, I'd like to call on a sales representative from ATRAM to help guide us in starting to plant our own gardens and to tell us more about how to invest in the ATRAM Corporate Bond Fund.
Good morning, everyone. To open an account with ATRAM, just visit our website at atram.com.ph. Here, you can learn more about all the funds we offer, including the ATRAM Corporate Bond Fund. But if you have more questions, visit the website's Frequently Asked Questions page or ATRAM Academy page as well. It will then guide you to our online investment platform, Seedbox. It's as simple as that, so I hope you do visit our website at atram.com.ph. Thank you.
So so even our platform no is in the gardening theme, Devi, seed
Yeah,
box.
perfect.
Thank you so much for that information. So I'm looking through the questions from our audience, and there are quite a few interesting ones. Let's start off with this one. How does this fund fit into the overall portfolio of a client?
Sure, no. So I think the easiest, I mean, the most common type of investments that retail investors here are stocks, no, because it's very marketed, no. But if you look at the stock market over the past months, it gives, although it offers you good risk reward for the risk, even it's high risk, high reward, no. It makes you think, no, because of the volatility and the uncertainty. And it makes you actually, because of the movement, it makes you scared, no? This type of investment, the ATRAM Corporate Bond Fund, reduces that fear of you, no? If you buy this fund and you complement that with your stock portfolio, at least every day you can look at the fund and you can tell to yourself that a part of my portfolio is stable. It's giving me income, and I'm not afraid that I will lose money on this one.
Thanks, Devi. I think that was clearly answered. Moving on to our next question, we have one from the audience. If I invest in ATRAM Corporate Bond Fund and once the company pays its debt, will I receive the earnings separately, or I see this as an increase in fund value?
All right. No, so thank you for that question. Very interesting, and I think it's good to clarify, what a corporate bond does to you. No, so interest for corporate bonds, interest come in regularly. No, so it becomes part of your investment. That's why if you look at the NAV chart, or can we go to the slide so I can refer to it? All right. So you will see here the price appreciation. No? In this this includes the interest and the capital appreciation. So those interest that the bond receives on your behalf becomes part of your investment. So they are accrued. So actually, when I think about accrual, it's like your it's like your kuryente si Meralco, no? Habang gumagamit ka, nadadagdagan yung gastos mo. Although nabibil ka sa dulo, every day nadadagdagan. So, ganun din sa bond fund natin, no? Every day nadadagdagan ng kita mo, although bit by bit by bit by bit. But over time, that bit by bit becomes large, no? So, it becomes part of the total value of your investments.
Okay, moving on to the next question. Someone wants to know your thoughts on what are the concrete indicators that we are in the face of economic recovery. Changing from ECQ to GCQ only allows opening the economy, but not an assurance that we are in the right path.
All right, no. So I think good, and I think it's pragmatic. That question is actually very realistic, no. So what are the indicators that we're looking at? So the first one is mobility. Mobility, meaning as measured by the amount of traffic that the GCQ generates economic value. No, why is that? Because if you open the roads, now the people that wanted to go out can purchase. No, and if you look at the details of the ECQ to GCQ, the curfew has been parang lifted, no? So extended time to actually consume, and more consumption means more economic movement. More economic movement leads to higher growth, no? Although I think you have to look at it more from a sequential basis, meaning in second quarter, lahat tayo nakakulong sa kwarto. Lahat tayo nakakulong sa mga bahay natin because we don't want the virus to be in our house. But given that I think there's a little bit of success on the health front, what's been happening is that this GCQ allows businesses to continue producing, no? And as they produce, there's more employment. So as there's more employment, there's more salaries. As there's more salaries, there's more income to be consumed, no? At the moment, no, the concrete indicators, we have to anticipate, no, because indicators at its best are always lagging. So we have to think of the parang domino effect yan. You don't actually wait for the last domino to fall to actually say that the pieces are going in the right direction. You can actually forecast and think about the economics, no, because the third quarter GDP will be out, I think, after third quarter pa. So I think in the next few weeks pa. And that's too late for you to realize that there's economic recovery. I think in its simplest term, you go out, look at the people. If there's movement, if there's purchases, if there's more people in the grocery, that's a good sign that there's economic recovery.
All right, I think that answered the question. I know you touched on this next question already a little bit in your presentation, but maybe you can tell us more about who this fund is best suited for.
All right, I think this fund is best suited for investors who can take minimum to medium type of risk, and I think for those guys who wanted to have increased investment through higher yield, and those who are doing some parallel type of savings relative to yung mga SSS contribution nyo, because of the stability and the income that the fund generates, it helps you save for your retirement. No, in addition to that, it gives you the opportunity to actually save for your if you're a young family. It gives you an opportunity to save for the tuition fees of your kids in the future. No, and you're not very much worried because what we buy in the fund, the fund is managed by professionals, are investments you are comfortable with, and we're doing the necessary quantitative and qualitative analysis to make sure that you get that stability and income.
Thanks for that, Devi. I have a question from an audience member. Maybe you can help clarify. Does the bond fund offer principal protection? Meaning there's no way that the NAV goes lower than initial investment.
All right. No, thank you for that question. No? So I think if you think about risk and return in general, no, the only ones that have principal protection are investments that or are like time deposit, no, yung mga PDIC secured, no. But if there's certainty that there's no risk, then what's coming to that is that you're not is not gonna earn, no, because for you to earn in higher yield or higher income, you have to take on some certain risk, and when once you take that risk, I think you have to trust the professionals that what we do is to actually make sure that that risk is manageable through careful selection, meaning what companies we invest in, and we have to make sure then that we're very diversified, no, with our investments to make sure na the principal downside is is very managed and small.
All right, thank you for that. For those of us who are just starting to invest in bonds, can you tell us the main difference of a corporate bond versus a government bond?
Right. No? So interesting. I think the main difference is that the government bond kasi is issued or they are borrowings by the government. No? So literally there's very small risk in taking on that type of investment. Why? Because the government can just print money and pay you. Corporate bonds naman, they are borrowings by corporations. No? In particular, for the Philippines, the corporate bonds outstanding are issued by very large, very established corporations that actually are mimic what the Philippines are. No? So I think the main difference is the issuer. That's the first one. The second one is the yield. No? Because there's a little bit more risk for corporate bonds versus government bond, it then gives you some sort of compensation, no? Higher yield versus government bonds. And apart from that, you can diversify. No, there's a lot of selection. No, for corporate bonds, you can buy an Ayala, you can buy an SM, Meralco, all the banks, BPI, Metrobank, BDO, Security Bank. You can also buy some telco companies like Globe, PLDT. So the variety, no, that's I think that's very important for us in building the portfolio. Whereas government bond is just issued by the government.
All right. So for this next question, Devi, could you explain a bit of the concept of market to market? If debts are paid regularly by companies, why are there instances that NAVs of bond funds decrease?
All right, no. So I think I think the main difference kasi of mark to market and I think it's the structure of the fund, no. The structure of the fund kasi can be structured as a full mark to market type of fund, or a certain portion of it is hold to maturity, no, or hold to collect. No? So if the full fund is on a mark-to-market basis because interest rates move up and down and risks move up and down as well, meaning of course, in certain times, the risks become more noticed. The value of the fund reflect those risks. No? So if interest rates go up, like significantly, full mark-to-market bond fund will take that into account because that's opportunity cost. No? So it lowers the value of the fund. Um, if interest rates are stable, the mark to market is also stable, no. But I think the good part with our corporate bond fund is a good chunk of this one is hold to collect, no, because we are confident that these companies will survive for a long time until they pay their debt and they pay all the interest, no.
Yes. So for our last question, I'd like to ask, what's the effect of BSP cutting the policy rates to 50 basis points? Do you still recommend us investing in bond funds despite this reduction?
Okay, sure. No? So I think we let's talk about that BSP cut in terms of investment and in terms of what its effect on the economy, no? Because it's very important. In terms of investment, so the interest rate reduction actually reduces the interest rates of government bonds first, and because newly issued corporate bonds are pegged to the government bonds, then your interest rates are lower. No? So can you go back to the previous slide here? So you can look at the fourth one and the third one and the fourth one. No? Because the 50 basis points cut by the BSP have actually generated lower interest rate across the interest rate yield curve. That has affected where corporates issue their debt, no? Because they issue on a yield plus corporate spread basis. Then your total yield becomes lower because your government bond goes lower. Then if this is your spread, it also goes lower, no? It's true for newly issued corporate bonds, but because of the structure of the corporate bond fund, which is hold to collect, we were able to take advantage of higher yielding corporate bond funds back in 2018 and 2019. No? And because it's hold to collect, you don't mark to market that lower. And that's good for the fund. And that's the reason why the total yield to maturity of the corporate bond fund is significantly higher than the government bond funds now and the direct corporate bond fund that you want to buy when you see the marketing materials of those investment banks. No? Yeah, that's the investment side. Maybe I can touch on a little bit on the economic side because the interest rate cut has been has lowered corporate borrowings. It actually improves the financials of the corporations that we invest in. No? You will wonder why, no? Because these corporates, they always refinance their debt. No? Those not so outstanding, yung mga nag-mature na loan nila, i-refinance nila. Pag na-refinance nila yan lower, what they actually owe in terms of interest rate cost is lower. No? It's helping the overall credit profile of the corporates that we are investing in.
Okay, thank you so much, Debbie, for that detailed answer. But I think that is all the time that we have for this webinar. Thank you, Debbie, again, and thank you to our audience. We appreciate you taking the time to join us today. If you have any further questions or would like to learn more about ATRAM's funds and strategies, please get in touch with your relevant ATRAM relationship manager or visit our website, www.atram.com.ph. Lastly, please answer the survey at the end of the session, as your feedback is important to us. On behalf of ATRAM, thank you very much and have a great day.